Yes.
Upward.
Session only.
11.
Like
Like.
topic.
Okay. Strategies.
You want me to start the intro again?
No, it's okay. I have so many tabs.
Maybe just need to make.
Hello guys, welcome to today's session of the morning market call. My name is Samson Zara. And yeah, Karibu. We will be covering a lot on particularly what is happening to the dollar, to gold, and also some currencies like Japanese yen, what is happening in the news, and then we'll be making a connection with what is happening on the charts. Okay, so before we start, remember this is educational information, and always do your own analysis before you place any trades in the market. All right, so let me just move to this. Yeah, so I'm looking at gold chart at the moment, and if you have any questions, again, if you have any questions, you can always just ask them on the chat section, and I will be able to see them. Yeah, so if you have any questions, if you want us to look at any pair, just check out on the chat section, or say hi in the chat section, or ask them on the chat section, and I'll be able to see them. All right, so first things first is what is happening to gold. Yeah, we did see a big move, which was last week on Friday, and of course that was because of NFP. So if I highlight that move, we saw something over here this entire day where we did see gold resting for quite some time, and then it became obvious after the reading that we were heading higher, and people tried to trade a retracement. I remember we were hosting the Instagram live during NFP, by the way, which you should also join. And I remember people who were saying it's time to retrace, it's time to sell at the top so that it comes back down, and that didn't happen. Yeah, so there's a lot to unpack, but we will have a recap of what happened and then go to what to expect. So if you have any chart you want us to look at, make sure you say so, or you just comment it on the chat section. So I'll start with gold. Now, the interesting thing with gold is we had this move on Wednesday. So let me just remove this indicator. We had a move on Wednesday, and it was a very interesting move. We moved lower. So this was the just a minute. Yeah, so this was the move on gold on Wednesday. We did see gold drop quite a bit during the Wednesday trading session, and it's because of what the Fed said. Yeah, so by Wednesday we knew we are going lower, and it was a clear downtrend. So if you look at this push downwards on Wednesday, it was very clear that we are going lower. And why was it that we were going lower? We were going lower because the Fed was very conservative about cutting interest rates, and that actually made the dollar stronger. How do you know what the market is thinking? Well, you can come to here what we call the CME Fed Watch tool. Yeah, so this shows you what the probabilities of the Fed cutting interest rates are. So if we expect a cut, if more people expect a cut in interest rates, then that means the dollar is going to weaken. If more people expect we're not going to cut interest rates anytime soon, then the dollar gets to strengthen. And by Friday or by Wednesday, on this report, what happened is we did see the meetings coming. So let me just open the meetings, the press conference. So we did see last week on Friday that we had, just a minute. Let's see. Yeah. So on Wednesday last week, so this is Wednesday, this was July 30th. What happened is the Fed came, they paused interest rates, they didn't cut. Yeah. And then what happened during the press conference was they were very conservative. Yeah, they were the market interpreted it as being very averse to cutting rates, and that costs. If you look at last week down here, we can see that. So this is target rate. There is 4%, there is 4 to 2.5%, and there's a current range which is 4.25% to 4.5%. Yeah. So last week we had very quite a bit if you compare to today. Last week we had less people believing that we are going to cut interest rates back to 4%. When the Fed was talking. Yeah, so we had seen an increase in the number of people from 31% to 35% in the number of people believing that interest rates are going to remain the same. Yeah, so because we had an increase to around that 5% from 31%, then that meant more and more people were believing that the Fed is not going to cut interest rates. That means we're going to experience a period of high interest rates, and that's why immediately after the meeting or all along throughout the meeting, what we saw with most pairs on the dollar is this move lower. So we had a very quick or sharp move lower in the market. So it was this move. If you were to look at USD JPY during the same time, which was on Wednesday, let me remove this. So if you want us to look at any pair or to mention any pair, just state it on the comment section or the chat section. Yeah. Okay. Okay. So last week on Wednesday, we were trying to get a story of what happened, and then we come down to what to expect. So I'm still explaining what happened last week until the Friday movement. So this was Wednesday. This was last week, USD JPY. If you are to go to a different pair, again, let's see. If you go to a different pair like this one, for example, we did see on Wednesday. So if I was to turn this to Wednesday, we did see a move lower. So this is Euro USD. So we did see this. Yeah. So we did see back on Wednesday. Yeah. So dollar in general weakened when more and more people. Sorry, the dollar in general strengthened. Yeah, when more and more people believe that they're going to have high interest rates remaining. So we did see this move downwards, and USD JPY we did see a move higher because now USD is starting, and then on XAU again USD is on the second part, so we did see a move downwards. Yeah, so that's what happened last week. However, when it came to NFP, and this is part of the reason why it didn't reverse, when it came to NFP, what we saw was very interesting. Yeah. Now, this is NFP, and I'm sure all of us are familiar with this website. This is NFP. Yeah. We were expecting 106 and 73,000 came. Yeah. And if you are to look at this jobs report, it's been a while since we've had any reading below 100,000. So you can see all the previous NFP readings here. It's been very, actually, this is since November 1st. We've not had a reading below 100,000 for a very long time. That's number one. Number two, even worse, we had revisions. Yeah. So many people look at this. Many people look at the actual, but even the previous sometimes is changed. That is something you need to know, that even the previous reading sometimes is usually changed, and they revise it lower. Yeah. So the previous number was 147,000. Yeah, you see now this is we're in August. This is August reading, meaning the previous was supposed to be 147,000, but they revised that number to 14,000. So you had two revisions, and this actually really impacted the market, and that's why when we saw this push up, I wasn't expecting us to go back down. So this was the move after the NFP reading. So a lot of guys tried to sell here thinking it's going to go back down, but those numbers are really bad. Yeah. And that's why we saw prices going higher and higher. Now, Why is it that a high employment reading is affecting or making gold to go up? It's because now we believe that if we were to see, let me come back to this. It's because now we believe that, remember what happens when there is very low employment? It means the economy is not doing so well. Yeah. And to fix that, the Fed needs to at least ease monetary conditions or monetary policy conditions. And that's why you can see that from that 5% of the people surveyed believing we are going to maintain, that number has gone down to only 9% as of today. Yeah, including also after NFP. That number went down to 9%. So only 9.9% of people surveyed, of economists surveyed, believe that now we're going to see rates remaining the same. And almost 90% of people believe that you're going to see rate cuts. Remember, the current interest rates in the US is 4.5%. Yeah. So you're looking at this number here, 4.5%. And now a lot of guys are believing that number. 90% of guys are surveyed, and these are economists and people who come up with these probabilities, believe that now we're going to go lower to between 4% to 4.25%. Yeah. And that belief is weakening the dollar. And that is why we are seeing what we are seeing at the moment in the charts. For example, with gold, we saw it going up, and we had a good opportunity to trade yesterday. For those who attended the physical classes, we had a good entry, or we had good opportunities to enter. That was yesterday. However, what we ended up seeing is, number one, we did not come down. We did not see a reversal in the move. Yeah. Number two, we are seeing this play out throughout a number of pairs, where we are seeing in general the dollar is weakening. Yeah, so even here we are seeing the dollar is weakening, and we are also seeing that with Euro USD. Now the thing is, okay, fine, the dollar is weakening, but you're not just going to trade it. You're not just going to go to Euro or GBP USD and trade like that. You need to know, okay, you already have one currency that might potentially continue weakening. You need to still find a pair that is steady or stable for you to pair it with the dollar, so that you have a good higher probability trade if you're planning to trade that way. So that means, for example, for gold, let me get back to this. What we were looking at yesterday during the sessions is, for those who have done market structure, is we did see gold change character during the NFP period that was here. Yeah. And now what we did was we just marked the previous swing points like that, and now we're observing what else or how far it's going to retrace before it progresses. So now it's just a matter of marking swing points and seeing, okay, we've retraced to what point, are we seeing signs of buyers coming into the market, and so on and so forth. So that's a bit clear for gold. However, if at all this is to change, then we need to see a significant influx of sellers into the market. If at all the buy hypothesis is supposed to change, then that means we need to see large red candles. You remember, price action is one way to read the markets, and it gives you a very good idea of what to expect. So if I see a large influx of sellers or large sellers, then that's when I'm going to believe probably the market has discounted the Fed and now there is new information in the market. However, if I'm not seeing signs of strong sellers in this chart, then most traders or most guys who are looking at these charts will be attempting to see, okay, where are the key levels where buyers are going to get in with this market. Yeah. So unless evidence shows otherwise, this looks like something that buyers are still attempting to gauge. Yeah. So we have a zone over there. If you're doing support resistance, if you're doing zones, then we have another level, very interesting one. This one was broken, so I'd probably look at this one over here before I look at this one. So those are the zones I'll be looking at generally as a trader. Yeah, so that's XAU USD. If you have any question with regards to which other pair we should look at, make sure to leave a comment on the chat section. Yeah, so that's XAU USD. Then there's USD JPY. USD JPY. Same story. Remember, first off, before you get to the news, USD JPY can be a bit tricky to trade because we are still expecting meetings from the Bank of Japan. So that one we're going to hold for a bit. Next, we have Euro. I think we should look at these items, what to expect this week before we start pairing these currencies and we say we are looking for analysis. So as a trader, the next thing you need to know is, okay, so you've found what it is you want to trade, which is, okay, you found that the dollar is supposed to be weaker, but then you still need a good pair for the dollar for you to be able to say, okay, that's something that makes sense to look for trades. Now, if you look at this week, we have two things. We have the BOE coming in on Thursday at 2 p.m. and they expected to cut rates, from 4.25 to 4%. Now that's the expectation. This has already been priced in, or it will continue to be priced in. And if you look at the votes, usually it's explained here. So the first number is how many MPC members are expected to vote an increase. Of course, that's going to be 0. The second number is how many voted to decrease. So the expectation is the majority will vote to cut interest rates, and less guys will vote to hold interest rates. So we are going to stay at 8 for those who have voted to cut. This is the expectation. Yeah. Remember, what happens is the market, as we approach this day, will slowly start or continually pricing these expectations. Yeah. That means, for example, if I'm a trader and I know the dollar is going to weaken, then because I'm expecting a cut, even on the pound, that means the pound should also be weakening. So that's not a good pairing to trade when you are looking at this chart. So for example, if I go to GU, let's see. GU. Let's look at GU. So if you have any chart you want us to look at, just mention it on the chat section. GU chat window. Okay. So you see why now we are seeing this, for example, because we are expecting both the dollar and the pound to weaken. So as we've explained, that makes GU move sideways. Now you can explain to someone why we are seeing a sideways trend in GU, because we're expecting a cut from the pound. Remember, low interest rates weaken a currency, and we've already analyzed and we've assessed that the dollar is also weakening. Yeah, so that means this is in a tight trend because both currencies are weak. So this is something you wouldn't want to look at for the better part of this week unless something significant happens. Same thing with euro. If you are to go to your calendar again, what is the expectation around cuts for the euro? I think we'll have to. Okay. All right. So you have the RBA. And last week, let's see. Oh, yeah. So last week, we did see for the EU, the referencing rate stayed the same. And we did see, let's see. Okay. Just a minute. All right. So with regards to the euro, we did see them holding their rates. So at 2.5, nothing much has changed. However, with this one, we are also looking at tariffs. I know they're reaching a deal. So that might support the euro. This is old news, old news. It's July 24th. Okay, just a minute. Okay. All right. Let's see what the market expectations around the EU are. So this is a more recent. Yeah. So probably when it comes to the EU, because they've held and they are one of the lowest, where it's also at 2.15%. If you compare that with the rest of the developed economies, they're already at a very low interest rate. So the idea is it's not the high or low interest rates that make a currency strong, but the change in interest rates. So do you expect interest rates to go lower or higher? That's what affects the strength of currencies, not exactly the current interest rates. For example, in Kenya right now, we are seeing the interest rate is much higher than 4.5%, but you don't see the Kenya shilling strengthening. It's the change in interest rates that usually affect the currency prices or the current exchange rates, not necessarily the current exchange rate. So with that, when we expect it to stay constant and when we expect this one to go lower, then that might support the euro. And that is why if you look at this chart, this is euro USD, then you'd want to see evidence of your theory playing along. So if I was to put an indicator, and I'm using this indicator called zigzag, just to plot for me swing highs and swing lows on the chart. Yeah. So what I'm looking for is evidence to support my or the reasoning that okay, we are seeing the euro might receive some support, in that we might see it stay a bit strong for the rest of the trading session, if at all news or the market believes that we're not going to see further cuts from the eurozone as of yet. Yeah. So I will be looking for, I can mark that swing low. I'll be looking to see what will happen if the market comes to this point. Remember, this was a previous swing point in the market, and that is where we broke change character. So that will be my reference point as to if at all we are going to see buyers coming back into the market. I'll be looking for them in this level. I'm not going to assume this is going to sell unless I see significant sellers. So unless I see big bearish candles, that's when I'm going to assume probably then there's other information that's making this go lower. However, I'm not going to assume that because we are seeing very small red candles. So it's not evident that sellers in this case are very prominent in the market. So we've had a look at gold. We've had a look at USD. No, not yet. USD JPY have held. We've had a look at Euro USD. US 100 is very straightforward. We did see it come down when the market expected cuts to not be implemented. We did see it come down, but after Friday, those expectations were changed. And this is one of the pairs that gave people sufficient time to look for entries. Yeah, because even during the NFP reading, we didn't see a big reaction. It didn't suddenly just spike up. Yeah, it gave people time to enter. I believe so, because this was when the news came in. This was Friday last week. We didn't see quite a big move up. We saw that on Monday. So it's slowly coming along, and it might be also because of other factors. So you might want to watch out for earnings and how companies are performing and things like that. But for the better part, we haven't seen we didn't see the reaction immediately on Friday. We've seen it come on Monday, and now on Tuesday we are looking for a retracement, and this is signs of significant selling. So if I'm a trader also, I'll be careful with this because we've struggled to go up for the better part of the morning, and now we're coming back down. So what I'd look for in this is I'll probably plot a fib tool from here to see what other key areas I can find. There's none that is matching. Okay, that is matching. Yeah, 50%. So I'll look for other key areas where I can possibly find or observe how the market is going to react. Yeah. Okay. So for questions, let me see if there are any questions. Yes. Any questions? Yeah, so we've already done gold analysis. I believe we have already done gold analysis. We've just said from this, what we expect is uh, actually, at the moment, it looks very interesting. From this, what we expect is we see signs of buyers getting back into the market. The only time I'll assume this is a downtrend is if I see significant sellers. That's when I'm going to assume it's a downtrend. However, as it is at the moment, it seems like a clear change of character happened on Friday, and now we are heading higher. So that's what it seems to me. But if we see significant evidence of it being otherwise, that is, if I see huge sellers or big selling candles, then that's when the hypothesis is going to change. Why? Because we are expecting a weak dollar, and that is because of what happened on Friday, where we had both the previous and the actual being very low. So the previous was 147, it was revised to 14,000, and the actual was around 70,000. So that really frightened the markets, and we have seen more and more people believe we're going to see a cut in September, and that is why the dollar has weakened. And gold is one of those pairs you can combine it with the dollar because, of course, it's not a country, so it's easier for it to price in dollar weakness than it is for currencies like euro and pound, because you also have to look at what is happening on the euro and what is happening on the UK side of things. Yeah. All right. So, oh yeah, what about Swiss franc? So, Swiss franc, let's see. So, for Swiss franc, just a minute. So, for Swiss franc, okay, so for Swiss franc, how- okay, yeah, so this is Swiss franc over here. I'm trying to navigate the controls. Okay, so we have this. Now, for Swiss franc, it looks very interesting. Number one, this was Friday. Let me just mark Friday. So this was Friday. Yeah. And this was Wednesday. So you can have a pattern where you're seeing we are seeing all the gains that were made on Wednesday by the dollar were erased on Friday. Yeah. Now, we are also seeing, I did see some news on Swiss franc. Let's see. Okay. So I did see some news on Swiss franc earlier. Uh, yeah. So they had higher than expected inflation. Yeah. So I don't think this is going to affect the Swiss franc as much because it's been around zero for the longest time. So it's not going to change suddenly. So I don't think this is going to really have a huge impact on our perceptions or the market's perceptions on where the Swiss franc is going to be. So it's around 0.2, 0% isn't so bad. So if we come back to the charts, then that implies it's a good pair to look for signs of a weaker dollar. That means if I was to plot my swing highs and swing lows on this one, I'll plot them like that. That means, number one, we did see a change of character here. We did see a change of character on Friday where we broke, and now we're seeing sort of a retracement back to this area. Now, I'll just see, are there sellers coming back into this market for us to see if the dollar is going to weaken further? Because remember, now here the dollar is coming fast, so that's USD CHF. We're just going to see, is the dollar going to weaken further? And is this going to lead to us heading lower like that? Yeah. So what I'll do is I'll plot all the key levels, this being one of them, 0.81, whatever. And then we also are going to do that to see if there are any other levels, 50%. Yeah, thereabouts. I'm going to see what's going to happen around that region, or that's what I'll be looking at. And if at all it passes this, then the last point I'm going to look for sellers to come into the market is this point over here. So this is where I'm going to look for sellers. That's the last point. If at all, but I doubt. Anyway, that's the last point that you're going to see, or you're going to be checking for sellers in the market. So I think that's okay. Any other pair you want us to look at? Nasdaq. You already looked at Nasdaq. Okay. All right, I believe that's good enough for now. If you're looking at pairs, just know that we have a general theme of dollar weakness, but don't just trade it with anything. It has to be with a strong currency. So remember, you're pairing it to a strong currency, and that's when you're going to have a combination of playing that macro. Remember, we are doing fundamentals first before you do technicals. Having said that, thank you for attending today's session. It's been quite interesting. If you want to attend the classes to know more on how to analyze, I am your host, Samson Mzera. So you can always just come to the classes and we will take you through from there. We are located at the Oval Westlands 5th floor. So you can just walk in and ask for us. We also have online classes. Those ones you can go register from the website under the trading classes section. They run from 3 p.m. But if you're interested with the physical, which I think are more helpful, from 11 a.m., I'd recommend you attend those also. Having said that, thanks for tuning into this session and see you in the next one.